Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Tuesday, the 17th day of January. Already halfway gone through the first month of 2023. Our toll-free number, 800-951-0592. The website at allamericangold.com. And earnings season has started with the banks last week. A lot of additions to loan loss provisions. We had a few more. The investment, Morgan Stanley, Goldman Sachs. Jason, more of the same, and especially from Goldman. Of course, we said it last week. Goldman has a lot of exposure to, we'll call it the subprime credit card markets. The worst results from Goldman Sachs in over a decade.
Yeah, I think we're going to see more of the same, Joe. This is
muted. So we'll work on it. He doesn't know. We'll see how that comes out. I don't know if maybe Jack doesn't have him on or now, but we'll get him worked out. But Morgan was okay. They also, like everybody else, continue to add to loan losses. Goldman, though, a huge increase in their loan loss reserves. And like we said, the worst profit in over a decade, has the Dow down almost 400 points this morning. Matter of fact, gold's off a little bit, silver's off a little bit. Not bad, but a little bit. The only thing's up today, the volatility index and crude oil up again as China, the reopening now starting to gain a lot more momentum as the economic data getting a little better in China this morning, which again, that reopening there is going to cause a lot more pressure in the energy sector because they really fell off. And Jason, they seem to be coming out of it now.
Can you hear me now?
Still can't hear him. So
okay,
I don't know. We'll work on it. But the other thing, so I got to bring this up. If you go to allamericangold.com, there's a video there talking about Kroger and all the empty shelves. You know, Kroger, Walmart's the largest grocery retailer. Kroger's the second largest. And of course, Kroger now is going to be Kroger, Safeway, Albertsons, Fry's, Ralph's. I mean, they own a ton of different names across the country. But with all the empty shelves, and it's just so ironic, is yesterday, my wife had to go pick up a few things, and she was at Walmart, and it was incredible. She comes home. There you go. You're back. She comes home, right, and she tells me, man, I don't know what's going on, but we know about eggs, right? She knows about eggs. I know about it. She goes, there wasn't any. But we were looking for, we needed toothpaste and nose spray. So I'm one of those guys at night, I get super congested. So I use a nose spray on a nightly basis. Wiped out at Walmart. She goes, there was only a couple of tubes of toothpaste. She goes, I only need one. I bought them both because I don't know what it's going to be there. And the nose spray, same thing. She goes, totally wiped out. And the other thing she was noticing is the private label brands seem to be gone, right? Customers are like, man, I want to pay the least amount. And you can't even do that because they don't even have it, Jason.
Yeah, I think as this year goes on, we're going to see a little more of that. What can I say, Joe? It's been a rocky several years. I mean, 2019, that's where it started. It started in 2019, and we've had emergency after emergency hit us every year after that. I think we got another one, whatever they're going to cook up this year, because there's going to be a lot of economic stress this year, Joe. I go to the stores to buy stuff, just like you're talking. Things are missing off the shelves. You know, it's like spotty now. The shelves are kind of full, but like, this item is empty, and there's another item that's empty. It's kind of a symptom to a larger problem.
Yeah, and we call it facing over. when you're in retail. In other words, hey, we don't have any of this stuff, so let's move the price tag over so there's just a small gap, and we'll just expand the amount of the stuff that we do have. Prices continue. I'm telling you right now, prices, they're not going down at the store. I'm just telling you that right now. When we get back, the CEO of Unilever. So when you look at grocery stores, Unilever, they're a huge non-foods company in the retail industry, and the CEO of Unilever saying, "Hey, guess what? Prices aren't done going up. Not only that, and to say that empty shelves, that's not a thing of the past either, Jason." So again, it's an interesting story that's being played out. We're saying, hey, inflation's coming down, but now small businesses last week said, hey, I don't know anything about that. Prices aren't going down. Everything's costing me more. And then all of a sudden, we're starting to, on earnings calls here, these CEOs are saying, hey, they're still not done going down. Well, I guess not going up. I'm sorry, my bad. It's still not done.
Yeah, and we'll see this for a long time. I mean, Joe, we've been around how many years? I've never seen deflation that was permanent. There's no deflation. It's always inflation. They've built it into the mold, so to speak. Prices just get more expensive, right, Joe?
Yeah, well,
it's
you know what?
Now.
We get deflation, but we only get it during crashes.
Yep.
Well, is that what we're getting ready for? I think it is. Patriot Radio News Hour. We'll be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour. The Dow down 380 points. The S&P's down 12. The Nasdaq's down 40. Gold's down 8, and I know Kitco has it down less, but the price is the same here. 19.14. Silver's down 25 cents, $24.10. This market update brought to you by our friends at Y-Refi. You've heard Jason and I talk about it. Listen, you got to have your gold and silver put away. We know that. Listen, for your 401ks and your IRAs, right? You have my son Joey takes care of you on that side. This extra stuff, Y-Refi, you got to look into it. If you got $50,000 or more to invest, you need to check out these guys. High rates of return. It's guaranteed, not correlated to the stock market. Doesn't matter what inflation's doing, right? Doesn't matter about Goldman Sachs and having the worst profit in 10 years, or Unilever saying, hey, inflation hasn't peaked yet. Check them out right now. Listen, you have to be accredited. But I know a lot of you out there, hey, I may not be accredited. I'm really close, but I may not be accredited. But I've got 50,000. Call them anyway. They're getting ready to end that. Get on the list here. InvestYRefi.com. The word invest, the letter Y, REFY.com. 888-YREFI24. If you want to call 888-YREFI24. And of course, for those of you that don't know, they deal only in the distressed private student loan industry. These are student loans that have been in default, that people have been written off by the banks, Jason. It's just a great program. It does a lot of good. Y-Refi's got a great system in place to make sure they've got the right people that are ready to pay these student loans off. And the great part is the average payoff with Y-Refi only 8.5 years. I mean, that's nothing. And nowadays, you talk about student loans, there's people that are in their 40s, 50s, 60s, still trying to pay that stuff off. So check those guys out. But Jason, the news of the day had to be Goldman Sachs with the huge increase in their loan loss provisions, and obviously the equity side of things not doing very well. We know this. The tech industry has been laying off. The banking industry has been laying off, and everyone's waiting for that other shoe to drop. and the Fed and Janet Yellen trying to convince everybody that inflation has peaked. But I'm going to say this, I'm hedging my bets here. Economic data out of China today, much better than expected. And they continue now to start adding more energy to their imports. So they want more oil, they want more coal, they want more soybeans, they want more corn. So it looks like China's reopening here. And then, of course, this morning you got the big, we haven't even talked about it, all the millionaires and the billionaires, these multinational corporations, they're all in Davos having their little meeting right now, Jason.
Yeah, I didn't get to read the whole story, but the World Economic Forum, I heard some of the big players are dropping out. Is that right? Is that organization actually having a little infighting there? I heard George Soros and a couple other guys were dropping out of that thing. So
Soros isn't going to be there. He's going to give a speech. He's going to give a speech, a Zoom speech. Said there was a scheduling conflict that was unavoidable. I mean, I don't know about that, right? I don't know if I'm buying that or not.
Is this the fear about is this the fear about the airline pilots that are vaccinated? Is that what this is?
You know what? Well, that's there's that talk out there. I saw that article as well that they don't want pilots that have been vaccinated. I don't know if that's true or not, right? I don't want to get into that, right?
The timing is interesting for these guys not to show up. I mean, you got to understand. I mean, going to Davos, this is the big club's party. This is their parties, right? To not go to that, there's got to be something extremely wrong with the situation. Why not fly out there? I mean, Joe, if I was rubbing shoulders with all the big wigs of the world, isn't that the place you got to go? You almost have to go, right?
It's not like, hey, you and your buddies out at the last minute, right? Here it is. It's Tuesday, and you're like, hey, let's all go to Davos on Friday, right? And no, they do. I mean, this thing's planned out probably years in advance, right?
Ahead.
Right? I mean, scheduling. Anyway, well, you know what? This was where the Unilever CEO was. That's why I kind of brought it up. But listen to what he had to say. And this is the thing where I always get a little worried because, Jason and I have been saying, hey, listen, we think this is kind of an inflation head fake, right? We got some cheaper energy prices and that helped a little bit. But I haven't seen the massive amount of layoffs to say inflation's going to go down. And we kind of think that maybe this is one of those short-lived things and that it rebounds later. But the CEO of Unilever says that prices will continue to rise in the near term, adding that his firm has a playbook for high inflation. And listen to what he's talking. And again, Unilever, global company. Thanks to its business dealings in markets like Argentina and Turkey. And of course, we know Argentina and Turkey, they can have inflation. It's all over the board, right? They can have 100% inflation one month, then it's 10% deflation, then it's 30% inflation. And he's somehow saying, hey, don't worry about us because, hey, we're used to dealing with really high inflation, kind of letting us know, hey, you haven't seen the totality of the inflation that you're going to see here at home.
Yeah, that's right, Joe. And I like the idea of the head fake. I mean, they did raise rates very fast last year compared to other times they've risen the rates. So they could have heated it up, so to speak. The key is going to be, Joe, that if they really wanted inflation to go away and stay away, is that they rose the rates as fast as they could. Even if they're going to pause, they don't lower the rates and they don't print money. But when the government wants, 1.7, trillion dollar budgets and things like this, it doesn't seem to me like the printing is done. I think they've been printing money this whole time anyways. I know that the balance sheet's gone down a little bit, but that doesn't mean they're not sending money around. And if what happens with the markets, I mean, let's face it, the markets are like a paper bridge. You add, if you put a little too much weight on it and you crash right through it. And I think when you're increasing the rates, you got to do it. It's like a balancing act. And I think the Fed's doing the best job they can, but there's just too much inflative pressure versus the market crashing. It's one or the other, Joe. It's always one or the other when you have $32 trillion in debt and your Ponzi scheme is about as weak as it's been in a long time.
Yeah, for the past 18 months, this is still the Unilever CEO in Davos, extraordinary input cost pressures. It runs across protochemical delivered products, right? We don't really talk about that very often. This is going to be your packaging, right? This is your plastics, right? This is your things that all the products come in, right? This is going to be, think about like cardboard to put the products in and all of that stuff. They're talking about agriculture derived products. So you think about a company as big as Unilever and all the products that they carry, and hey, we get a lot of ingredients, right, from the agricultural side of things, energy, transportation, logistics. I mean, did he miss anything? He basically said, listen, it's all still here. It's been feeding through for quite some time. And here was the key part. We've been accelerating the rate of price increases that we've had to put into the market. So again, Unilever saying, I don't know, you can say it's peak. We're still way better. In fact, not only are we raising, we're accelerating the pace, Jason.
Interesting. You mentioned the packaging. I was at the grocery store, I don't know, several days ago. And I think I think what's happening is they're encouraging the smaller packaging, because I was looking at, for an example, potato chips. Usually when you buy cereals, potato chips, all these other foods, you buy the bigger box with the more ounces and you get like a discount. It's a discount for buying more.
The family size.
The family size chips was more expensive per ounce than the regular bag. And the only thing I think of is, well, they're probably trying to get out of these larger bags. The packaging is probably too expensive, and they're pushing everybody into what they're probably buying a lot of, which is the smaller packaging, which may be just more available and more cost effective for them, Joe. So I encourage people, go out there and look at the large size versus the small size and do the price per ounce. And I'll bet you're going to be shocked that you're not getting discounts for buying more ounces anymore, Joe.
You know what? And it could be like you said, hey, the cost of that family size packaging is too expensive, or hey, our wholesaler, whoever we're getting the packaging from, is telling us, okay, we only got X amount. So how much of each package size do you want? Right. And they're saying, well, we need more of the regular size, so let's make the family size more expensive.
They might say, hey, we're only getting so many materials, so we're making this size.
Right.
So we better go discourage those other sizes because we're not providing for you. Anyway, that's and all these things, Joe. And you just talked about shortages on the shelves. That's a shortage on their shelf. They might not have 6 sizes. You're going down to 3 sizes.
And then he talked about energy. And I think this is really where all of this plays out. I really do. I think we got lucky. We got really lucky last year that crude oil didn't get worse. I thought for sure we could see, and I'm not talking about California gas, okay, but $5 and $6 a gallon in most places in the country. We got lucky. 2 ways we got lucky. Number one, we didn't have the hurricane go down Refinery Alley, right? We got lucky there. And then secondly, we got lucky that China was instituting extremely heavy-handed lockdowns for most of last year. The average, day, China would have anywhere between 200 to 400 million people locked down. And now that that's gone, here's what he had to say about energy, because I found this very interesting and worrisome. It's very hard to predict the future of commodities markets. Okay, yeah, I don't think that's a huge statement. But if you press the major oil CEOs, they've been a little cagey giving an outlook on energy prices. Unilever says that we know for sure there's more inflationary pressures coming through our input costs. And I think that's just a way of Jason. He's talking to the oil guys, and the oil guys are saying, yeah, listen, you just saw cheap oil, right? This was cheap oil. China's reopened now. We don't have the inventory, the strategic oil reserve, right? We're not going to get extra oil there. And why do I feel like the Biden administration made a mistake 2 weeks ago when they said that they're not going to refill it because it was too expensive? And all his oil's done since then is go up about another $10 a barrel.
Biden's done nothing but try to shorten the supply of oil and push the price up. So when a president who makes decisions for a country on some level, and I'm sure he's being told, I don't believe any president really making any decisions. I think their handlers do. But when the president goes out in the open and says something specific like that, you're obviously going to trigger a response from other countries. So why would he even say that, Joe? We'll refill it when it gets cheaper. Doesn't that just tell all the other countries, oh, let's push the price? Isn't that what it tells them?
Right. Well, let's not make it too cheap. Patriot Radio News Hour. We'll be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour. Got a couple of good items here today. Silver, we talked a lot about silver, especially in light of the CEO from Sunshine really shedding light on why premiums have been so high, which is saying, hey, we're producing all the silver disc we can produce, and global demand is through the roof. So you're getting what you're going to get, and there's no more to get. But we have this lull in premiums right now. Last week we put an all-out buy on silver because of the premium. And Jason, the fear is, hey, silver is going to go up $6 or $10 more this year. I think that's my feeling. The problem is we're going to probably see the premiums go back to where they were. So add another $6. Now you're talking about prices of silver going up, $12 to $16, which is why we're saying, hey, put it away now. We had a great special last week on silver half dollars. This week it's silver quarters. Rolls of silver quarters are going to be $200 a roll for silver quarters today at 800-951-0592. And then just real quick here, just because I didn't do it before. Yeah, you're talking, that's just under, hold on a minute. Let me make sure I gotta get my math right here, Jason. I went to public school. So just under $28. Wow. That's the price here. I mean, that really is in line with the historic averages. We said that about half dollars last week. So rolls of silver quarters this week at $200 at 800-951-0592. And then on the gold side, $20 gold pieces 1 through 9. We're going to do a volume discount here. 1 through 9 at $21.50. 10 or more at $21.35 at 800-951-0592. And like I said, gold right now down 7 at $19.15. Silver's down 25 cents at $24.12.
Silver started the year 2010 at $17.17 an ounce. At the end of 2010, silver was at $30.63. So a $13 move in silver is already historically happened. When the prices are higher, the percentages means that we're at 24 essentially, we could see 32 or to 36 silver this year very easily. We could see 40 silver early. That's how fast it can move. It all depends on what the markets are going to do, and then what's going to happen in the world. I was watching Stansberry Research. It was Daniela Carbone. You've seen the guy, and then
Yep,
Gerald Salente.
yep,
I know
she does a lot of those interviews. Used to do all those Kitco interviews for years. Now works at Stanberry.
Yeah, and Gerald Salente was on, and it's funny because he's talking about the world and how it's broken up into different philosophies. And he said the West is really a war mentality because the Rothschilds have reaped a lot of benefit over the centuries from war and being on both sides. He said that the Chinese and the Russians and others are a little bit more on the business side. They just want to be sovereign and take care of their own country more than anything. And they don't really want to mess up the world scheme. They just want to make sure that their part is taken care of. He says that's kind of what's going on in his opinion. You won't believe it. He whips out a magazine, the Trends Journal, released on February 22nd, 2022. And it says, from the COVID war to the Ukraine war to world war. He says the prices are going, the markets are weak. Everything we're saying, Joe, and he said the same thing that I've been saying. There will be a false flag event or a nuclear exchange, which will then be the emergency that they'll blame all this on. And everyone will forget. And he started talking about all the economic nightmares before the dot-com bubble. And then you have, then you have 9/11, and you have all these emergencies economically happening, like 2019, the repo market's collapsing. The Chinese and the Japanese are selling all of their treasuries, are selling tons of it, and suddenly here comes coronavirus. So he's saying we're there again. It's just happening at a more rapid pace. He's telling everyone to hold on, Joe, because it's everything we've been talking about. And I totally agree with him. False flag or some sort of emergency is going to happen.
Well, those are right. We used to call those the black swans, right? These events that nobody really sees coming. But again, there's so many moving parts to this thing globally. It's going to be very interesting. Obviously, we hope not. I'm not basing anything that we're talking about an event like that. Because then you take all these cards off the table. I think what we're really focusing in here on is, so far, at least from the financial institutions, earnings haven't been great, right? Loan loss continues to pile up. Unilever saying, hey, we're still raising prices. China's reopened. Matter of fact, OPEC just came out and said, listen, China's going to add at least 800,000 to 1 million barrels of oil a day. They expect China to hit a new all-time high for oil usage in 2023. And Jason, I'm still anticipating a weak dollar. And obviously, all of those elements help drive gold and silver prices.
And I don't know how weak the dollar will be versus other currencies, because I think other currencies will drop also, so making the dollar look okay. But Joe, I think we are absolutely going to see a weaker dollar because they are going to stop raising rates. They are going to be in a wait and see position for at least a little while. And then what if the false flag emergency happens? Then they'll start, we got to drop the rates. We got to start printing. We got to save the country from this horrible emergency. Joe, that's what I see happening. And you're right, you can't really call these things, but you can make a mountain out of a molehill anytime you want. I said during the COVID emergency, I said several times, like, look, all you have to do is shine a spotlight onto something, and they could just turn it into a worldwide emergency. I said, what about animals in shelters, right? The dog catcher, they have all these shelters, right? And people put their animal, hey, I'll put the animal in the no-kill shelter. Then the no-kill shelter sends the animal to the kill shelter, and they still kill the animals. If they put a spotlight on animals at shelters, everybody would have 15 dogs and cats in their living room because there'd be so much worry over this new news story that went all over the world, right, Joe? They'll create an emergency. It will happen.
Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason here. Patriot Radio News Hour, US $20 gold. We got a volume special going on 1 through 9, 2,150. 10 or more, 2,135.
This is
and
Chris,
then
right?
Silver quarter rolls of 40 silver quarters. So pre-1965 silver quarters. Just like, like now, you get a roll of quarters from the bank. It's got $10 worth of quarters in it. Same thing here. You're going to get 40 silver quarters. They're at $200. That puts your price point at below $28. We got silver sitting here at $24.15. It's just a great time to pick up silver with this low premium for however long we have it. Hey, we'll take it. And having these premiums available right now, it's a great thing. So rolls of silver quarters, $200 a roll. The $20 Liberties, $21.50, 1 through 9, 10 or more, $21.35. And Jason, I've got those prices up on our website as well at allamericangold.com.
Yeah, start stacking and keep on stacking. And this is, once again, with the lower spot price and the higher premiums, and now the higher spot price and the lower premiums, silver's been in this section of time where, we're going to look back and say, hey, that's where you could get, rolls of this for this price, or an ounce of gold for that price. And it was in that range for I guess a couple of years, Joe. I mean, looking at that gold chart again, which I go to regularly because you want to look at this stuff. It's been going up every year as an average closing price since 2015. And you had from essentially 2012 all the way through 2018. That was a large chunk of time to be buying. And Joe will tell you that their gold sales were, before I jumped on, they were kind of tepid for those years because it was just lower. It had come down from that spiked high. And suddenly 2018 was in 2019. Those were the last couple of years where it was kind of in that zone you should have bought it in. And then it jumped up in 2020 to 1773 was the average closing price. And 2021, 1798. Now, in the last couple of years, 2021, 2022, 2023, we've been around spot price gold around 1,800. That's coming to an end. We're already over 1,900 on spot price with the premiums lower. The next thing that's going to happen, Joe, is higher spot price, higher premiums, and we're going to bump up a couple of $100. And looking at that 2010, how everything jumped, Joe, we could have one of those years this year.
Yeah, and I think we will. And again, I think that the central banks of the world, they'll spend anything to try to convince people that somehow inflation is over. There's not a chance. The amount of money they created out of thin air, I'm sorry, it just doesn't work that way unless it's a huge economic, recession type, depression type levels. And then I just saw a flash across my screen here, the ECB now saying, hey, after our February meeting, we want to slow the pace of rate hikes. So, Jason, again, another one of those things that points to, and you talked about the Unilever CEO said, hey, commodity is kind of hard to know. But if we're talking about slowing the rate hikes and then, of course, stopping rate hikes, that's going to put wind behind that commodity sale. And like I said, China's back open again. Look at copper, 4.25 on copper, right? Because China's starting to move again. And I think this is, one of those things where, once again, Jason, why should we be surprised? But I just see another policy mistake coming out of the central bank.
Well, I mean, they don't have a lot of room for success, and the one thing they got, Joe, is they know what they're going to do when they're going to do it, and their friends know what they're going to do and when they're going to do it. So I don't think these guys really care too much, Joe, from the Fed on up. If things are going to go down, things are going to go up. If you simply know what the future of finance is going to be, you can always make money. So I think that's why they always have all these lagging indicators. Instead of leading indicators, they have lagging indicators. So that way we're always looking at what happened last month. Well, what about what's going to happen next week and next month? Why don't they just show those numbers? And there's not a lot of projection numbers that you can trust, right, Joe?
Well, let's face it. If we were going off of projections, then everybody that worked at the central bank should be fired, right? I mean, they're never. I mean, they're not even close. And if you put out the projections that Jason and I give versus the central bank, you would think, oh my gosh, these two clowns, these guys. Look how smart these two guys are compared, and we don't even get to look at all the data they get to look at.
Look, in I think it was 1816. I can't remember what year it was, the Battle of Waterloo. The Rothschilds bankers, they made a projection. They had some news. They said, Napoleon won. Napoleon, they're coming for us, right? And everybody sold everything. Everybody sold everything. And who bought it all? The Rothschilds bought it all. They bought the entire country of England in one deception. They owned the crown. The kings and queens of England now did what the Rothschilds wanted. That's what bad information does for the rich and powerful, Joe.
Yeah, and they just spew it out. I mean, let's face it. I've got DirecTV. So I've got Fox Business Channel. I've got CNBC Asia. I got CNBC Europe, right? I'll call it CNBC International. That's another channel. Then I've got CNBC. Then I've got Bloomberg, right? They've got 4 or 5 channels dedicated to gaslighting all of us with these baloney projections they keep throwing out there. That's why you put gold and silver away. 800-951-0592. Jason and I coming right back with the final segment. (800-951-0592). Joe and Jason wrapping up the Patriot Radio News Hour. Of course, we're coming right back with the half-empty cup. And I think it's going to be a pretty interesting show, so make sure you tune into that. As we wrap up here for the day, silver quarters on sale at $240 a roll. And then the $20 gold pieces, we got that volume discount 1 through 9 at $2,150. You buy 10 or more, Jason, we take that price down to $2,135 at 800-951-0592.
Stack it up, man. If you have the ability to cash in whatever it is, or you have money sitting around, Joe, I'm looking at the things that we've been talking about, especially the last few weeks, and especially just even just yesterday with ESG scores and digital currencies. And let's just say that if they have the same event that they did with gold in 1933, or turn it in. Once again, I was thinking the same thing, but Joe Salente, he and I have similar ideas on how things are going to go. Joe, think about the guy that has the large amount of cash buried in the backyard. The farmer. The guy who's got it in the mattress. Just for a rainy day. And then they say, well, it's going to be worth nothing on X date in 3 months, or next month, or next week, right? When you bring all that cash in, I get the feeling that the 87,000 new IRS agents have a lot of work to do. That's what I'm wondering, why they get hiring those guys, Joe.
Well, I'm going to say this, the show that we got on the half empty, we're going to start talking about what is this going to be all about. One of the things, and you've heard Glenn Beck and others speculating that when the digital currency comes, hey, we're also going to pick, not only are we going to pick winners and losers, we're going to tell you how much money in your bank account you can have. They're also, Jason, I think, going to use this as a way to, whether it be reparations, or hey, you're in the right minority class, you get to keep more of your money, or you get bonuses, you get special privileges. These are the things that they'll be able to do with this digital currency.
Correct, Joe. And then when there's another massive market crash, which could be this year, essentially, or next year, instead of a bailout, which they won't bail out the banks anymore, they'll give people money again, like they did, and inflate everything. But this time they'll tell you, here's the money, and here's exactly how you're going to spend it. And if you don't, it has a time limit on it. All that's going to be in there.
Yeah, absolutely. That's one of the big things for it is when they do. Think about when they do give money to the end user. Think about like with COVID when they sent checks. You could do whatever you wanted with that money, and that was a big problem for them. Right? First of all, they want you to spend it. They don't want you to pay down debt. They don't want you to save it. They want you to spend it. And that's one of the things, too, with that digital currency. They can say, hey, we're going to give you $500 or we're going to give you $1,000. We're going to give you $1,200, whatever it may be. But guess what? Here's what you can't do. You can't use it to pay off debt. And, oh, by the way, it has an expiration date. That forces you to go out and spend it, right?
It's chess, Joe. They gave the money out this last time. The huge inflation came in. And so when this next crash comes, like, well, it's your fault. We gave you the money and you caused the inflation. Now we're going to give it to you again and you're going to do it our way. Right, Joe? Got to play chess.
There you have it. 800-951-0592. Jason and I coming right back with the Half Empty Cup.